My name is Darren. Our team seeks to demystify the sometimes confusing world of international tax. And why do foreigners look at establishing companies in the US? And for a number of reasons. Everybody has their own reason for doing that. For me, in my experience, the two main reasons that make the US a particularly attractive jurisdiction would be privacy and asset protection. When I say privacy, is not necessarily, well, in some ways it can be a secrecy jurisdiction. Of course, we have the Corporate Transparency Act and there's new legislation coming in place to make that less of a compelling factor. But relatively speaking, it is one of the few developed jurisdictions, developed economies in the world that have not signed any formal automatic exchange of information. As you know, most of the developed economies in the world and some of the emerging markets as well, they've signed automatic exchange of information agreements, the multilateral as well as bilateral agreements. It's also known as a common reporting standard, which means they will automatically share information. You open up an account in Switzerland, for example, and the Swiss bank knows that you are from Portugal or from the UK or from France. They will just automatically send data to France, right? No one needs to ask, it just happens automatically. And so that level of sharing is quite common within the developed world, the exception being the US. The US has one-way sharing. Under something called FATCA, the Financial Account Tax Compliance Act, countries share data with the US. The US does not automatically share data with anyone. And it's not to say that the US is being overly difficult, although some people may think it is. Portugal, for example, can get information if it is that they believe that a Portugal citizen or resident has been involved in some nefarious activity involving US banking or US corporate structures. They can go through the legal system and get access to that information, but it'll be pursuant to some sort of formal legal request. It won't be automatic, and that's the difference. The US doesn't do that exchange of information automatically, and that's where the privacy comes in. The other element that I mentioned at the top two is asset protection. The US has, tried and tested legal system, which means that there's a high degree of trust that the income, the assets, the wealth contained in the structure would not be readily accessible by individuals or authorities that are not legally entitled to it. The legal system is pretty robust, which under certain structures and we're using certain jurisdictions make it near to impossible. Of course, unless there's some sort of criminal activity, then all bets are off. That's going to happen. But assuming there's no criminal activity and it's just some sort of civil dispute or divorce or whatever, things can be offered a higher degree of protection than elsewhere. Two other reasons why I think the US is quite popular for structures is simply because right now, especially, the US is the largest, most vibrant financial market in the world. Whether it is people are just investing in the US, you may want to do it using a structure. And I tell my clients all the time, you never invest in your own name. You always use a structure. That's like finance 101. So even if you're just buying shares in Tesla or Microsoft or whatever, you're probably going to want to use a structure. Or for those who enjoy the real estate game, again, real estate, great, but use a structure to properly do so because there's certain risks and there's certain responsibilities and estate taxes and stuff that can be legally avoided by having the right structure. And then, of course, there are business owners who want to expand and access the US market. And to do that, you need a US entity to do it properly. There are a number of reasons for doing it. And I guess it really depends on the individual circumstances as to whether you need a US structure at all or whether it works best given alternatives.